Hey traders, welcome back to the weekly Forex Forecast. In today's video, we're going to look at a shocking piece of economic data that came out of the US on Friday. And it suggests that despite the benign unemployment and non-farm payrolls data, the labor market in the US is in serious trouble. And because of this, we saw bond yields coming down at the end of last week. And this sets up risk on setups coming into this week, not only in stocks, but also in the Forex complex. So if we have a look at the scores for the coming week, you can see the Swiss franc is sitting at the top. This is the number one long idea going into next week. And to the downside, it's the US dollar short plays, which I really like. Now, based on what we just discussed, the Swiss franc, if you're going long, that is kind of a risk-off play. But it looks like we have a kind of mixture of setups here because apart from the dollar and the Swiss franc, a lot of these other markets in terms of the individual currencies are just kind of neutral. There's no real significant direction. We're seeing kind of choppiness in the market. So I do like US dollar Swiss franc longs next week alongside US dollar shorts. And it's the US dollar shorts that I really like even more than the Swiss franc longs. Why? Because first and foremost, we had that really poor ISM data coming out in the employment component. Now, why was this shocking? I use the word shocking because it was genuinely a shock to see this print because we've only seen in the entire survey's history this kind of print, which is this low, twice before. And that was during the great financial crisis of 2008 and the COVID crash of 2020. So when you're looking at economic data which is coming out and you suddenly get a print in the services sector, because don't forget the services sector is the biggest sector in the US, you suddenly get a print in the employment component of the services sector, which is consistent with the crashes of 2008 and 2020, that is a shock. That is a surprise. That is not something that was actually expected. And this is why we still saw bond yields coming down. It actually took precedent over the benign NFP and unemployment data. And the unemployment data and the NFP data itself was not actually that impressive when you start to dig a little bit deeper. For example, there were a lot of full-time jobs that were lost and they were made up by part-time jobs, this kind of thing. So the headline data for non-farm payrolls last week and the unemployment data actually covered up quite a lot of cracks which are appearing in the labor market. And the ISM services employment component really highlighted and underscored the trouble facing the US labor market right now. And this is why we saw a near-term bounce in stocks. We saw some risk on coming into the markets as traders started to look through the official non-farm payrolls and unemployment data and really looking at that services report. And the view is, well, if the employment data is actually not as good as it looks on the surface and it's pretty bad, then the Fed are going to have to cut rates sooner. And this, of course, is bearish for the dollar, bullish for stocks, and it creates risk on setups. So I am generally interested in risk on as that kind of follows through into at least early next week. But I do want to look at Swiss franc longs again, because this is setting up in the algorithm here on the hedge dash algorithm as the best play, at least to the long side. If we have a quick look at the US dollar itself as well, you can see last week we just kind of pushed higher, and then on the Friday, of course, we got the employment data and this ISM services, and we saw a weakening. Now that is what I'm expecting to continue down. Whether we come all the way back down to the low or whether we hang around in this area remains to be seen. I do think on balance, there is a chance the dollar comes down and takes out the low. I'm even open to the idea of it testing the major low down here. It doesn't have to do that. First port of call would be this low over here. But a near-term sell-off in the US dollar next week into the 10156, this is the near-term sell-off that I'll be looking at. And if we continue to push higher in the dollar and we trade into this low, really nice low sitting at the upper bound, that would be a great opportunity to short the US dollar from the upper bound and reflect that in US dollar pairs as well. In fact, this was the upper bound last week. We traded into it and then we started to hold this and sell off from here. So that's why I wouldn't be surprised to see this coming down pretty much, from Monday, Tuesday, Wednesday onwards, and then maybe starting to find a bit of a bottom on Thursday or Friday. So certainly I'm looking at risk on at the beginning of the week. And if we get that risk on, that might actually set up some nice Swiss franc long plays, which are risk off at the back end of next week. So based on that, the pairs we're going to be looking at heading into next week are US dollar Swiss franc to the downside, which is my favorite pair actually heading into next week. We're also going to be looking at franc yen to the upside and euro franc to the downside. I'm also interested in other dollar pairs. So New Zealand dollar to the upside, Aussie dollar we can also look at to the upside. And at the same time, we're going to be looking at euro dollar, of course, because we look at this every week. They're both kind of weak, so maybe there's a range play we can look at here, but it's not one of the best markets directionally heading into next week. And then finally, I do like yen shorts as well on balance versus New Zealand. So New Zealand yen to the upside, Aussie yen to the upside, both of those risk on plays. And the final one we'll look at is Euro New Zealand to the downside, which is also a risk on play. So especially if we get continued dollar weakness after the poor ISM employment component on Friday and we get bond yields coming down, this is going to create risk on. And it's those pairs, especially versus the Japanese yen, that could really benefit from that heading into next week. The final thing to note is heading into next week, we do have US CPI on Thursday. So this is why I do think we could see the US dollar doing one thing into Thursday and then reversing. So just bear that in mind. If you're holding US dollar pairs through CPI next week, you are taking a risk because the market can get very volatile on US CPI prints. Kicking it off with crude oil, as we always do before looking at the rest of the markets, I do like crude oil for shorts going into this week. Now, why? Because not only is it kind of bearish to neutral, but at the same time, we now have the fear washed out of this. So the probabilities of this continuing lower in a meaningful way are now increased. Because when we get this data on the 10th of December, and that is the close, so that's the close of this week right here. So as soon as this week closes, we get the data to say there's a 70% chance now over the weekly time horizon of crude oil pausing or correcting higher. And of course, that's exactly what happens. The next 2 weeks we pop higher. We get another fear reading over here, 70% chance pausing or reversing higher, and we reverse higher last week as well. So now this sentiment is washed out in the weekly. I do like crude oil shorts going into next week. Just remember, guys, starting from today, you can get a 14-day trial of the brand new HedgeDash app at hedge-com if you want to try this out risk-free. So looking at the 4-hour chart, you can see this was on the 10th. This is where we got that data, 70% chance of pausing or correcting higher, and we started to move higher. And what I would really like to see going into this week is continue push higher first in crude oil. If we push higher in crude oil, this sets up the opportunity to look for a potential breakout. And bear in mind, we've now washed out that bearish sentiment where this market was getting towards extremes and needed to pause. So this actually clears the way for further decline. So any breakout intra-week, I'm going to be looking down towards the 70.39, maybe onto the prior low here. You know, if we test this prior low, I would definitely be looking at booking profit short term here. Or if we start to continue higher and we don't get the breakout, instead we get the chance to short this on the pullback above the 76.84. This is the second place next week I'll be looking for a short-term sell opportunity in crude oil. I'm not going to be looking to buy crude oil next week. Okay, so let's have a look at the market, starting with US dollar Swiss franc. This is my favorite market going into next week, and you can see the big sell-off when we got that kind of loosening of market conditions on Friday. And again, this sell-off, when you see the US dollar selling off like this, when you see bond yields coming down, it's because of expectations of future cuts by the Federal Reserve. And why would they do that? Because the economic data is not good. And this is proof that the market looked through the non-farm payrolls and unemployment data, which was actually pretty decent. You know, on the surface, we just discussed that under the surface, it wasn't that great, but the headline was actually, you know, pretty good, pretty benign, better than expected. And yet we still saw yields coming down. We saw the dollar selling off, and that was because of that ISM component that we looked at. So going into this week, I am looking for further declines, and we have a nice sell-off here on the 1-hour chart. Any potential pullback in this area is an opportunity to look for an intra-week breakout down to the 0.8410. Once you get below here, the market is pricing a 70% chance of pausing or reversing in this area. So you might push through this, but usually not very far. So this is a great profit taking area. If we continue to pull back, and you can see this kind of double top, we've already kind of broken with momentum, so I wouldn't be surprised to see this kind of consolidate, flag, and then sell off. But if we fail to break and we just hold this trend and we trade above the 0.8580, this is going to be an area where I'm going to be looking for a near-term short in US dollar franc to the downside. Next market we're going to look at is franc yen. And now franc yen, you can see over the daily time horizon on a rolling daily basis, it is starting to see greed. When you have this light green, it means greed. And very much like the levels, but on a sentiment basis, that implies a 70% chance of pausing or reversing. It usually tends to wash out. You get fear or greed coming into markets, it washes out, and then you start to see greed again, and then it washes out, etc. So what this tells me is we may actually start off with a correction and a pullback in this market. What I'll be looking for here, and we're on the 1 hour chart again, is if we pull back in this area, I'm going to be looking for a potential intra-week breakout, and I'm going to be looking up towards the 172.63 as a profit-taking area. And if we fail to break out intra-week and instead we kind of just hold this trend and pull back below the 167.94, this is going to be the second place next week. So I can either buy this market or do nothing. Selling this is not an option. I can either buy it on the breakout or on the pullback below the 167.94. This will be the second place. I'll be looking for a near-term buy opportunity in franc yen. The next market we're going to look at is Euro franc. Now I do like Euro franc to the downside. You can see we've been consolidating after selling off. We had the start of the year kind of data spike over here. And you can see we're moving sideways and we're consolidating. So what I would really like to see is going into next week, if we can pull back higher, if we can start to make our way towards the upper bound, because I can either short this or do nothing. I can't buy this next week. If we start to make our way towards the upper bound, I'm going to be looking at potentially an intra-week breakout with momentum like this, a pullback, and that would be the opportunity for a follow through into the 0.92258. Or if we hold this, and the setups that I really like are buying, on a pullback. If we break above the 0.9374, this is an area next week I'm also going to be looking for a near-term short opportunity in Euro franc. Next is New Zealand dollar. Now this is my favorite dollar pair going into next week, and it was actually one of my favorite pairs, if not my favorite dollar pair going into last week. We had the lower bound sitting right in this area, and we came down, we bounced on it once, we came down below it, and we reversed again on the data on Friday. So going into this week, I do like New Zealand dollar to the upside. I did actually miss this trade last week. I traded other things, but I missed this one. But coming to this week, I would like to take advantage of this market given the opportunity. What I'd like to see is, I'd like to see this pulling back, and I'm on the 4 hour chart here just so we can see some more information. But I'd like to see this pull back, and I would be interested potentially in an intra-week breakout into the 0.6332 and potentially onto the prior high. I mean, if we break through the upper bound and we test the prior high, that'd be a good profit taking opportunity. But the second thing I'm going to look for is if we continue lower and we start to test the prior breakout over here and we trade below the 0.6158, this is the second place I'd be interested in buying New Zealand dollar on a pullback next week. Just bear in mind, we have the CPI out of the US on Thursday. And if you're holding these markets, as I said, through that, you are likely to see volatile moves. So I'd like to be in and out of these trades before Thursday, if possible. Next is Aussie dollar. Now, I don't like this as much as New Zealand dollar or US dollar franc. US dollar franc and New Zealand dollar are really my two top dollar pairs going into next week. Aussie dollar versus the US dollar and Euro dollar versus the US dollar. These are on my watch list, but they are markets that I would prefer not to trade if I can get the opportunity in US dollar franc and in New Zealand dollar. So very similar setup to New Zealand. We also tested the lower bound last week and bounced nicely. We pulled back below it and we bounced and we closed back above the lower bound. So again, on the data print last week, this spike up, this is what I was talking about. This outperformance, this risk on move as the dollar sold off because of that ISM data coming out on Friday. So going into this week, I am looking for continued upside in Aussie dollar. The question is, are we going to get this moving straight away intra-week, in which case I'd be looking for a breakout. So I'm being reactive. I'm not trying to predict necessarily exactly where this market will turn. The idea here is to have the overall bias so I can be long or do nothing. But as the market pulls back, if we start to break out and I see momentum, that is reactively the opportunity to step in and look for a move into the 0.6805. And alternatively, if it doesn't break there and it pulls all the way back and we've got a nice high over here that can be retested, this would be the second place below the 0.6621. I'd be looking for a near-term buying opportunity, buying the dip on Aussie dollar next week. So the final US dollar pair in the Forex universe we're going to look at is euro dollar. We look at euro dollar every single week. So the problem with euro dollar this week is they're both weak currencies. This is what's shown up in the hedge dash algorithm. They're both currencies that we kind of want to be looking to short. And yes, the US dollar is a weaker currency in the scorecard. So on balance, I would be looking at long plays. The problem is it's the intra-week trading. Once you get two strong currencies paired against each other or two weak currencies, you can see these markets really chop. So intra-week breakouts can get churned and chopped about. But what I would like to do is when you get two weak currencies or two strong currencies paired against each other, it does set up a range play opportunity because those markets tend to chop. So if they breach their upper or lower bounds, you can still get good range trading opportunities from them. But intra-week breakouts with two weak currencies, they're a no for me. So coming into this week, what I'd like to see is specifically, I'd like to see euro dollar trending down below the 1.0841. Probably testing these highs, that would be great. And if we do breach this lower bound here, this is an area, because I can buy this or do nothing, I can't sell this market next week. This is an area I'd be looking for a near-term buying opportunity before CPI next week. Moving on to the yen pairs, the first yen pair I like is New Zealand yen to the upside. You can see we're kind of chopping around. So if we pull back next week and we start to flag, I will be looking for a potential intra-week breakout into the prior high and also into the 91.67. And if we just hold this trend and we continue down and we breach the 89.04, especially if we push all the way through here and take out this low, so now we've got, not only are we oversold on the week, but we're also testing into a previous support. This would be a place I'd look for a near-term buying opportunity in New Zealand yen next week. And the final yen pair here is Aussie yen. Now, we're starting to again get into Forex pairs, which are kind of neutral. And again, those markets I don't tend to like intra-week breakouts. I like to look for intra-week breakouts in the really better markets, the strong markets, because that's where you get the explosive breakouts. We may break out intra-week, but because it's neutral, what I would prefer to look for in this market next week, the opportunity I'd like is a breakdown below this low and also a breach of the 95.73. If we get that, this is going to be a good area to look for a near-term bounce to the upside and a short-term long opportunity in Aussie yen next week. And the final market we're going to look at is Euro New Zealand. Again, this is not a fantastic market in the sense that we have a really strong and a really weak currency, but the euro is definitely underperforming the New Zealand dollar. And you can see what I really like here is, yes, we may get an intra-week trade, but I really like the opportunity to range trade this from the high because I can either be short this or do nothing next week. I can't buy this. So any pullback in this market next week, specifically what I'd like to see is if we break above the 1.7712 and essentially we become overbought on the week with a 70% expectancy, and we trade into this prior high to give us that resistance, that confluence between the overall probabilities of this range and also the prior high, this would be a great place next week to look for a near-term short opportunity in Euro New Zealand. Okay, so wrapping up the video with gold and silver. I do like both of these to the upside next week because of that bearish bias in the dollar, because of the weak ISM employment data that came out on Friday, and that kickstarted, catalyzed the drop in yields, which is bearish for the dollar. I think this continues into next week, and as a result, I'm bullish on both gold and silver, but I prefer gold. So any pullback in gold next week, I've already started to kind of break out here. Any pullback in gold next week is viewed as an opportunity to look for an intra-week breakout into the 2082 and even the prior high. That would be a good place to book short-term profits on any long plays. Or if we hold this trend and we continue lower and we test this low, so we start to break below here, and also we become oversold on the week, so we breach the 2017.42, this is the second place I'd be looking for a near-term long opportunity in gold next week. Wrapping up the video with silver, I am bullish on this again because, a drop in yield, sell-off in the dollar should catalyze precious metals higher, and I prefer gold out of the two, but I am still bullish on silver. So coming into this week, any pullback is viewed as an opportunity to look for a bullish reversal up to the 24.03. And if we hold this range and we pull back, there's a really nice low over here in the 4 hours that if we trade into this should act, especially if we breach the 22.59, we become oversold on the week and we start testing this prior low. This is a very good place to look for a near-term bounce in silver and a short-term long opportunity next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com.